Great. Sounds good. Yeah. Hi, everyone. My name's Cole. I'm one of the co-founders and head of business development at Elixir. Been in the crypto space since 2016. Was the president of the blockchain club at UC Irvine. Uh, was there for 2 years. Wrote the first DeFi-focused newsletter on Forbes back in 2019. When DeFi started taking off in 2020, I dropped out of UC Irvine, went all in on it. Focused mainly on angel investing, LP'd into a few funds, including like Three Arrows, and started getting like deal flow from that. And was just pretty deep DeFi until a little over a year ago when Philip reached out to me with the idea for Elixir. Thought it was super relevant based on issues that I was seeing in the space relating to market making. So was super sold on it. Was the first check-in. So or day one believer, and then a couple months later dropped everything I was working on to go full time. So Philip, I'll pass it over to you.
Hey guys, this is Philip Forte here on the Elixir main account. Real quick on my background. So I've been in crypto since 2016 when I started the Carnegie Mellon blockchain group. I was the president there until I graduated from CMU. I then ran a company called Block Venture for a little over 3 years, up until around 2 years ago when, saw the opportunity for Elixir and decided to go full time on it. Really high level at my last gig. We were essentially an alliance of 41 different research groups and 44 venture funds in the space. And we worked with like a handful of the top companies in the space over like a multi-year long time horizon, helping them get plugged into this big alliance that we built up, as well as the greater crypto industry just more broadly. So through that, I worked with guys like Solana and Flow Network, Moonbeam, right? Like earning team tokens, working with each of these teams over a multi-year long time horizon, and just really helping them get plugged in across the space. Really the inspiration for Elixir actually came when at Block Venture, we were essentially coming across like 4 or 5 blockchain startups a day, and all of these guys needed a market maker for their centralized exchange pair, and for their pairs on centralized exchanges. On top of that, we were talking to a lot of the different order book exchanges as well as concentrated liquidity AMMs, and they were also going through the same like 4 or 5 names, trying to court these guys for provisioning on their pairs. And so like, we got a lot closer with these firms just because we were essentially connecting so many of these guys over to these market making firms, and realized that market making in crypto is actually fundamentally different from market making in traditional finance, right? In traditional finance, the P&Ls that the firms actually make is the profit center for these firms. So that's when you have like these crazy sub-second latency, you have near zero execution times, you have all of these different HFT firms that are running, they have 1,000 U Chicago PhDs, all chasing alpha. And in Web3, like when we chatted with these different market makers, they were all running like stock Hummingbot scripts. And when I would talk to them about it, they're like, yeah, well, we don't actually make money on the provisioning of liquidity. We're actually break even on the provisioning of liquidity. Where we make our money is charging these exchanges and projects access to this algorithmic market making. And so I went to Cole and I was like, look, there really is no reason that a decentralized algorithmic protocol couldn't do the same thing. And so that was the inspiration behind Elixir. And so I guess without diving into too much of what Elixir is doing, we essentially, just to give kind of a super high level overview, because I know we'll probably dive into it here in a second, but we're building the industry's decentralized algorithmic market making protocol for centralized and decentralized exchanges. And so when supply liquidity, the protocol will algorithmically build and deploy that liquidity on the order books in a delta neutral fashion, building up the order books, tightening up the bid-ask spread, and deepening the liquidity on those pairs. It's very similar to Uniswap V2 in that, how Uniswap has their X times Y is equal to K curves. We actually run the X times Y is equal to K curve equivalent for order books. So LPs actually have the exact same risk return profile as Uniswap V2 LPs when supplying liquidity. And so that we bring kind of a very familiar risk return profile to LPs, and we bring that to these different order books, making it very easy for people to be able to supply liquidity and earn incentives, for supplying this liquidity to these order books. Because we're fully decentralized protocol, we actually are fully composable. And so we have our own DPoS protocol that essentially posts fraud proofs on Ethereum mainnet, very similar to like Arbitrum's security layout. And so that actually allows for native integrations into different leading dexes. And so we actually have over 20 dexes that are integrating Elixir into the actual core infrastructure to essentially unlock their user liquidity for retail unlocking retail liquidity essentially for algorithmic market making on the exchange, essentially allowing for anyone to supply liquidity to these pairs and earn a share of these incentives that these exchanges are paying out. And so Injective is one of our first, if not our first deployment. Actually, it's looking like it'll be the very first one for us, and for good reason. I think they have great infrastructure that is makes it very easy for us to build on, and I think they have a very lucrative OLP program, which I'm sure they'll run through here in a second. That just makes it really easy for anyone to be able to supply liquidity and onboard large amounts of TVL to the Injective exchange. And so, yeah, we're really bullish on them. I'll pause there. That's the super high level of what we're building. Down the road, we actually will also support market making on centralized exchanges for these protocols. And we have over 60 protocols lined up and committed for that. But that's, at some point in the future. But yeah, I mean, I'm really happy to have this conversation today. I know the first question was, what is Elixir? So we're kind of able to check that off as well. But yeah, it's a pleasure to meet all of you. And it's great to chat with the Injective guys again.
Yeah, and for Eric and Albert, if you guys want to run through quick introductions and share a little bit more about your order book module and the OLP program and such, we can then take it from there.
Yeah, that was a great introduction, by the way. And so, yeah, hey guys, this is Eric, co-founder and CEO of Injective Labs. So Injective Labs is a core contributor to Injective. So Injective is basically a blockchain that's purpose-built for finance. It's an open, interoperable layer one blockchain powering next-generation DeFi applications, some of which includes decentralized spot and derivatives exchanges, prediction markets, lending protocols, and much, much more. And Injective is unique in a way that the entire ecosystem, the stakeholders, are all centered around leveraging or supporting these powerful core financial infrastructure primitives that all these apps and all these decentralized ecosystems can utilize. They include a fully decentralized MEV-resistant on-chain order book, and all forms of financial markets such as spot, perp, futures, and options are fully on-chain, and also a plethora of decentralized cross-chain bridging infrastructures as well, which allows Injective to natively connect with Ethereum, IBC-enabled blockchains, and a lot of non-EVM chains. So yeah, that's kind of like a brief introduction about Injective. Started off, working on this concept and this contributing to this ecosystem back in, I would say, roughly end of 2018 or so. So it's certainly, been a while.
Yeah. Hey, everyone. I'm Albert, the co-founder and CTO of Injective. Yeah, I think Eric described Injective really well. So yeah, I guess we can go on from here. I can talk next about the OLP program and more details about how Injective's order book module and exchange works, unless we had other topics you want to touch on first.
No, that's a perfect place to start.
Yeah. So first, I can explain a little bit more details about Injective as a decentralized exchange protocol, or the capabilities that are offered there. We have many primitives on the exchange for, as Eric mentioned, supporting spot trading, perp trading, futures trading, options trading, and this is all infrastructure that's provided by the exchange module on Injective, which itself hosts a central limit order book that's on chain, fully on chain. And also the matching is also on chain and done in what's called a frequent batch auction at the end of the block. And that's just a mechanism that we use in order to prevent front running and also MEV. So yeah, that's a high level of the general structure of the exchange that Injective offers. And yeah, I guess where it's relevant is that also we have incentives for liquidity natively provided, and most recently we announced the Open Liquidity program, or the OLP program, And here, well, what this program does, it allows anyone from a market maker to a normal trader to come in and earn rewards for providing liquidity. There are 3 criteria that like liquidity is judged on or scored, and that is the uptime of the liquidity in a given epoch or like 28-day period, the volume that their orders actually consume. So if you provide liquidity that's not actually used, then that's not very useful. And finally, of course, like the actual bid-ask spread, and the amount of depth that you provide at how tight of a spread. So yeah, now it's this if quite efficient, transparent program that anyone can come in and provide liquidity and begin earning rewards. And of course, Elixir will be one of these parties. So yeah, that's OLP in a nutshell.
Yeah, it's a great description of it. I think that kind of leads into the next question pretty well, which is like so far. I mean, you guys have been around for quite a while. What has liquidity looked like in the past in terms of like how you source it, how you bootstrapped it early on, that type of thing?
I mean, we're mostly in agreement on the current landscape for mid to a small firms that are participating or providing market making service across the entire algorithmic trader spectrum. Generally, for the bottom 50%, if not 75%, they're generally just utilizing extremely unsophisticated strategies, and calling it a day because they're perfectly hedged. They have some like exclusive option deals, or overall like they just have a much easier time because of and I would say like it has always been the case right up until roughly 2020 or so, when there's been the kind of like an initial realization, or kind of like this initial adoption around I would say like basically provisioning liquidity on your own, utilizing Uniswap and like different types of dexes out there. And it hasn't like Uniswap has been around for a while at that point, but that type of utility was never really heavily explored until that time, where IDO was like all the craze, and people realized that anyone can participate within liquidity provisioning. It doesn't require a highly sophisticated setup, and as a matter of fact, a lot of times these type of like constant product market making oftentimes can provide superior liquidity for the user end, and perhaps even outperform in terms of volume compared to sophisticated market makers. So now, especially with Injective's on-chain order book primitive, with a lot of these type of sophisticated market making algorithms, or certainly not so sophisticated for like the kind of like mature prop shops out there, but stuff like Avanel Stoikov, stuff like different types of firms, they can all now be exposed to the general public and be subscribed within a click of a button, theoretically at least. On top of Injective, on top of Elixir, very very soon.
Yeah, so I think that leads into a question for Philip. Philip, could you kind of run through like how Elixir will kind of contribute to the next evolution of liquidity in terms of bringing that like simple like one-click type of liquidity deployment to retail users on order books like Injective?
Yeah, no, I'm happy to dive in on that. So yeah, really to date, we've seen AMMs just attract a huge amount of TVL, right? Like AMMs, and like they essentially is it like inherently profitable to supply liquidity to an AMM, right, without incentives? Like it's not, right? But it's so easy for people to understand like what their risk return profile looks like, and it opens up a new market, right? And that's kind of why we've seen AMMs proliferate with regards to TVL. For order books, things haven't kind of gotten there yet. You've seen that, like, yeah, there's these a few kind of centralized firms that come in and they provision liquidity using, I mean, what like the general public will think is like, oh, like these guys are running like crazy algorithms. Generally, they're like running very simple strategies in Web3, and these market making firms are doing like, yeah, essentially very basic delta neutral scripts essentially that they're running in order to actually provision the liquidity on the order books. And so, what Elixir, like with that kind of setting the stage, what Elixir is trying to do, right? Like we are like Elixir is decentralized infrastructure enabling protocols and exchanges to bootstrap liquidity to their order books. Like to date, there is no way to easily incentivize this liquidity to the order books. Like in that, like there, it kind of needs to be something where users can very easily, with like one click, like be able to supply liquidity and earn a share of these rewards, right? And so this is something that like concentrated liquidity AMMs as well are facing, right? And that like a lot of them are paying, like we know of like very top like concentrated liquidity AMMs that have their exchange liquidity, and without revealing any names, like they have someone sitting there all day manually updating these V3 bands around like their current like mid prices so that their end users have little slippage, right? Like there is no way to incentivize that like algorithmic market making to where users can just very easily like supply liquidity and earn rewards for doing that. And so that's like really where Elixir comes in, where we bring this like familiar risk return profile. Users can just supply liquidity, essentially like how they would to an AMM, right? But they're able to do that to the order books, like in Injective, right? And be able to actually earn a share of these incentives that Injective is paying out, right? And so what that like ends up doing, right, is it brings in a ton of other, like, number one, it brings in a huge amount of liquidity, usually. It's kind of what we've seen, just from like kind of existing conversations, right? Like we essentially are able to free this market for liquidity where it's not 4 or 5 firms that are like, oh, look, I get some rewards and this is my revenue stream, like sweet, right? And they generally end up there's very little incentive for those parties to hold those tokens, right? Like they kind of just view that as their revenue stream, and you're able to open it up to where anyone in the community can actually very easily earn these rewards, and it's a perfect alignment. Like those are the people who are really like excited about holding those rewards, right? And on top of it, we bring full trust and transparency, right? Like you don't need to trust a centralized entity, because essentially it's fully trustless protocol. You can see exactly how your liquidities can be provisioned, right? So it's this new primitive, in that like users can very easily supply this liquidity. There's full transparency, right? The Injective exchange is able to get a lot better capital efficiency on like their OLP program rewards that they pay out, right? And which benefits like everyone, in that like there's deeper liquidity on the pairs, and it's better democratized. Anyone can now participate in this. It's not just like generally a handful of firms. And I think Injective does a great job in realizing that and kind of structuring the program the way that they have, where there's not just like a few big firms that like are kind of the ones that they're trying to get, kind of, because every order book essentially has this inherent problem that like generally like, and all of the rewards that are being paid out by the exchange are just getting paid to like a few big market making firms because of the technical complexity. And so with the new OLP program, they really hit the nail on the head there and allowed for anyone to earn these rewards. Elixir essentially brings that easy one-click supply liquidity to this pair, right, and earn rewards with a very similar risk return profile that you already know, right? That makes it, which is kind of, we think, like the last missing piece that could really, I think, bring quite a bit of like liquidity onto Injective. And so we're really excited. We already know of multiple like firms that are like excited to put in liquidity into the Elixir pools on Injective, and so we're really excited about this collaboration. And I think the OLP program has been structured like quite well, to allow for Elixir to really shine. So yeah, cool. Hopefully that kind of like touches a little bit on Elixir, our mission, and then just how like the OLP program like really is something that we're excited about.
Yeah, and one last follow-up question there. I know Eric, when he was talking, mentioned strategies like Avlaneta and Stoikov, and I know as Sasha Stoikov, one of the co-authors of that strategy, is an advisor for Elixir, He's currently at Cornell. But yeah, Philip, could you just like very briefly talk about the strategy that Elixir uses and how it's comparable to like x times y equals k for Uniswap v2 bonding curves, but for an order book?
Yeah, so the algorithm is actually so the algorithm's the same algorithm that most of the leading market making firms within crypto use to deploy order book liquidity on the order books in a delta neutral fashion. So it's very similar to the x times y is equal to k curve, right? In that like the balances will start at 50-50 as one side gets more loaded, right? So it goes to 60-40 to 70-30. The bids, like for example, will come in farther and farther down on the order book, and the asks will get closer and closer to the mid price to try to rebalance those books back to 50-50. And so essentially, instead of setting, like in the simplest market making strategy, right, you have pure market making essentially, right? So you have the mid price, you place bids below, asks above, right? And you quote a bid ask spread around that. Essentially, what a Velanita token is essentially that, but it takes into account the market maker's books. And so it quotes it around a reservation price, which is essentially the mid price, but also like taking into account the market maker's books, right? So essentially, if you are like as you get progressively farther away from 50-50 to 100 and 0, it becomes exponentially harder and harder to drain every last dollar out of that one side that's misbalanced, right? So it gets exponentially more and more expensive. Just same exact thing as Uniswap V2, right? Like if you have if you're 50-50 on a pool in Uniswap V2, as you get closer and closer to 100 and 0, like it becomes exponentially harder and more pricey to get that as that like one side gets closer and closer to 0, it becomes exponentially harder and harder to drain that last dollar. So it's we have the exact same risk return profile. I think the way to think about our algorithm is like the x times y is equal to k curve equivalent for order books. I also want to stress that like our protocol like does not like we're not chasing alpha. There is no alpha in a Velanita. The market maker, the people who are really familiar with market making, especially in like traditional markets, generally don't use a Velanita in order to like chase. Like usually these big HRT firms are running more proprietary algorithms to chase alpha. Like our protocol is very similar to like Uniswap V2 in its positioning, right? Where is it inherently profitable to supply ETH and USDT on Uniswap V2 and just like not earn subsidies? Like no, generally it's not, right? But there's over $10 billion in liquidity on Uniswap, and it's like, why is that? And the reason that is because it opens up a new market. And most of the liquidity that on there is subsidized, right? They made it very easy to subsidize these LP tokens to where people can now essentially earn rewards, right? Where if you're earning 35 or 40% APY in liquidity mining rewards, now having a couple percent of impermanent loss isn't really like the end of the world if you end up taking a little bit of that on. Because with Uniswap V2, I mean, you're fully passive, right? Like you put your liquidity in there and you just wait for toxic order flow essentially to kind of batter you around. And so we essentially, our protocol, like we're not like we actually have 1 second of latency because our protocol updates orders once a second across all of these different exchanges. So for us, right, like we're not essentially for every second of latency that you add, you have to widen your bid ask spread. And so we are able to quote like well within what traditional market makers will quote, up to around like 4 or 5 seconds of latency. So at 1 second, we're actually still like able to beat a lot of these centralized market makers. But our goal for our protocol is not to be always the top of book, like competing, trying to like shave like fractions of a millisecond off of like our latency and execution times, right? Like what we believe is that there needs to be decentralized infrastructure enabling protocols and exchanges to incentivize liquidity to their order books and like allow for people to very easily supply liquidity and earn a share of these rewards, right? And I think that's the infrastructure, that's our positioning. And so and then we have the exact same risk return profile as this Uniswap V2 provisioning. So that's like a little bit on that, and like kind of our positioning. We're not like it's the same thing as Uniswap. Like you don't supply liquidity to Uniswap expecting to like shade to like earn a ton of money on the provisioning usually, which like you're essentially trying to you're making that market on Uniswap, and you are able to earn rewards. And we actually are the same exact thing for order books as well as concentrated liquidity AMMs.
Cool. And yeah, now I want to ask Eric and Albert a question, and give them the chance to dive deeper into the OLP program. So I'm curious, in the past for Injective, like what have been the ways that you guys have looked at like incentivizing liquidity, and where does that liquidity mostly come from? And right now, like if you're a user, what can you do to get involved in the OLP program? And then lastly, like what will it look like once Elixir is deployed on Injective?
Yeah, sure. I can explain. In the past, we had a DMM program, or two programs actually, as well as a trade and earn program. The OLP is kind of the bigger replacement for the DMM program. For those of you who don't know what DMM stands for, it's called a designated market maker. So exchanges from like in the real world in TradFi and also like normal like sexes will have like a handful of like designated market makers that they work with to provide liquidity. And these there were many DMMs on Injective that were earning these rewards. And of course, their incentives were more to maximize their rewards and minimize their risk. And because it's like it was not as open as like or permissionless to join. In the beginning, like there was less competition ultimately, which then resulted in worse outcomes, right? Because yeah, like if a market maker can take less risk for providing $1 the same like $1 of liquidity, then they'll quote wider. So yeah, a lot of thinking went into the OLP program to really kind of make the system ungameable, and taking into account different metrics, as I mentioned, where you have to do well on all three of both like liquidity, meaning you have to provide a good depth, so like a lot of size of your orders at small spreads, and then on the uptime you have to do that for like the majority of the epoch, or actually the vast majority of the epoch, because you'll get exponentially penalized if you don't. So that incentivizes market makers to have deep liquidity at like tight spreads, for like as long as possible. And the final piece is on volume. So yeah, like they can't game the system by like just trading or doing that on a market that like no one really trades or no one really knows about. They have to actually have this liquidity be consumed. And yeah, that way we can really incentivize that, or ensure that like everyone is aligned, that users are going to get actually good liquidity, and market makers are going to compete to provide the liquidity. Yeah, so that's OLP on a high level, and some of the thinking that went behind designing it. And Nicole, I think I forgot your other questions, but let me know if yeah.
Yeah, I do want to add on that, like, what really makes OLP extremely exciting is that it basically hints as, or it's designed for this upcoming future where any address, any arbitrary address can participate in, this OLP program. And this means that whether you're a, on-chain market making protocol like Elixir, or any type of on-chain strategy, or any type of, smart contract that's participating, you're all eligible for reward in the most permissionless way possible. And this is kind of really how OLP is structured to be more future proof, and that's to be able to seamlessly and automatically identify these liquidity providers and these market participants, and then reward them in the most direct way possible.
Yeah, thanks for the breakdown, guys. It's super exciting. I remember Cooper told me about it like right before it launched. I was like, dang, like this is definitely a huge step forward from like the typical like DMM programs that are like very gated and white labeled that a lot of exchanges like even today still have. So yeah, congrats on launching that, guys. Very exciting. Yeah, like second part of the question, either Albert or Eric or Philip can take this, like whoever thinks it's most apt. Um, I'm curious, like just to understand, like okay, so like a user comes to the table like through Elixir, and deposits like collateral to market make a specific pair. Like what does it look like in terms of the process flow for users like seeing their rewards and like claiming their rewards and watching their liquidity be provisioned on the order book. So yeah, maybe that's a good question for Philip, or both of you can all of you can tag in on it.
Yeah, so I think really what we want this to look like is like something that's as seamless as possible for end users, right? Like we want this to be something where like users could supply liquidity, right? To say, for example, they could come in, they could press a button to supply liquidity to USDC and USDT on like Helix or just on Injective in general, and they can earn a share of these rewards that the OLP program is paying out. And so something like, just to stress, in case it wasn't clear, like these OLP program rewards are going to be going directly to the LPs that supply, right? Like the Elixir is just the infrastructure, is just the pipes essentially to allow for users to very easily press a button and supply liquidity to these pairs. And so, yeah, I mean, really, that's the I think we're actually actively building out this smart contract. So the way that the actual flow actually works, right, is that say a user presses a button to supply liquidity to a pair on Injective, the on the back end their funds will go to a smart contract, right, or they can go to the Elixir protocol website, right, like our front end for Injective, right, and be able to supply liquidity. Something that is cool that Injective does is you actually don't need to, like, they make it very easy to bridge funds from other chains. So you can just via MetaMask, like press that button to supply liquidity, and then essentially those funds are then provisioned by the protocol, right, on the back end, right. It's essentially you just supply liquidity to those pairs via Elixir, right? So it's passive. You can just press that button to supply liquidity. You'll see bids and asks actually like popping up on the order book, right, over time, right, and then you'll see your rewards accruing in real time, which you'll then be able to claim. And so it's fully non-custodial, fully permissionless. Our protocol, our protocol is like fully decentralized, right? So that's kind of what that looks like from an end user's perspective. There are still some tiny things we're working out right now with respect to like claiming. I know that like OLP rewards, I believe, are distributed monthly at the end of the epoch. So there are like little things that we're figuring out, and we're actually actively kind of building out as we speak, which is like maybe there's a way where users can if they supply liquidity for a few days, right, like it's almost like a they're able to claim those rewards at the end of the epoch, right? Like we're trying to figure out, I guess, like the super kind of small details on that side. But the overall flow is established, right? You're able to supply liquidity to these pairs, right? The funds go into a smart contract, and you can also access those on the we'll have our own dashboard on the Elixir page, right, where you can supply liquidity to pairs on Injective, right, and earn a share of these OLP program rewards, right? And then when you claim those rewards, you'll see those in a dashboard that you'll be able to actually just like claim, and that'll come directly from the Injective protocol itself. So you'll be able to earn those rewards. And so that's like kind of our positioning, right? Where those pipes to enable users to supply liquidity and earn these rewards while having the same risk return profile as supplying liquidity on Uniswap.
Super cool. Thanks for the breakdown. I mean that's you kind of touched on this, but would love to give you the opportunity to share like where it's at in terms of development timelines, like when users can expect to see this, what's remaining to build out to enable this.
Yeah, so we're aiming for end of July having this live. It's going to be, I guess we could share some alpha on how this is actually going to look. So it's going to be a capped launch in that like we're going to we're going to actually have this be something where like individual users, like it's going to be capped, like for example, at $1 million in liquidity, right? So Injective has 15 million in liquidity, so we're like, hey, look, we'll essentially open this up to $1 million of liquidity, and then we'll essentially like it'll sell out, like contributions essentially will be capped, and then a week later we'll raise the cap by like 500,000 or another million, right? Every week, and so that way we're able to kind of like slowly kind of onboard the protocol. We can also reward people. It's going to be kind of like competitive to get in, right? We're essentially allowing for users to earn a share of these rewards, right? Like that to date haven't been very easy to access, and so that's like really kind of where Elixir comes in, right? We make it very easy for people to supply liquidity to these pairs, and so yeah, like it'll be something where you're able to supply the liquidity. Really, where we're at on the development side, kind of to touch on the second part of your question. So we are ahead of schedule, actually. So we were originally aiming for mid-September to go fully live, post audits, post everything. It's looking like, yeah, we're a bit ahead of schedule. We have the actual smart contract that is almost fully completed. We then are getting a audit done by either Trail of Bits or QuantStamp. It's going to be one of those two names, just depending on like availability, timelines, and like pricing and a bunch of those things. But we're in touch with both teams. It's looking like we'll be using one of those guys for the audits on this smart contract. It's a very simple smart contract. I mean, it's only like 50 to 100 lines, and of that, over 90% has already been audited by like Open Zeppelin's. Vault smart contracts are very easy. And there's like a lot of precedent for Vault smart contracts. So there's not a lot of complexity on that side. So we don't expect that the audit itself will take too much time, but we're hoping to have the full smart contract ready by like Monday, like July 10th, then roughly a week for the audit, and then a week to actually remediate everything / final testing. And then, yeah, we're aiming for like end of July to go live with everything. So yeah, that's kind of the current timelines on the development side.
Cool. Thanks for sharing. Yeah, I want to just give Albert and Eric the opportunity if there's anything else you want to share or any other updates you guys want to run through. I guess now could be a good time, and then we'll open it up for any questions for the last few minutes from the community.
I actually have a question for you guys. Do you envision that in the future, the kind of strategies for market making will expand on Elixir, or that users will be able to kind of define their own sort of strategies? And if these will include, let's say some alphas, then so be it. Will there be a diversity of strategies, like similar to, I guess, how there are like protocols on UniV3 that can do this for end users? Or will it just be more of like, let's say, the existing like standard like Avalonia Stoikov market making sort of approach?
Yeah, so our approach is a great question. So yeah, our approach to this is really like the main bottleneck that I think is holding a lot of people back from supplying liquidity. Like there first needs to be that like kind of X times Y is equal to K standard equivalent, right? That people can get comfortable with. And so we have one algorithm at the moment. Yeah, it is the Avalonia Stoikov. Essentially, X times Y is equal to K curve equivalent for order books. Like it's pretty industry standard. It's delta neutral and shares pretty much the exact same properties of Uniswap v2 LPing. So we plan on starting with that. Long term, there is the ability for our protocol to run different algorithms. Like I know that for a fact, like people are going to be that people are building on our architecture for like someone's building like a liquidation engine using our validators and our consensus that our protocol uses. It is something that is important in that our protocol, right? Like the main problem that we're seeing is that like there needs to be decentralized infrastructure, like allowing these exchanges and protocols to like incentivize and attract liquidity to their order books, right? And there's really that doesn't exist as of late, and so really that's kind of our main the main goal is really attracting and solving this need. And then, yeah, long term, there's a lot of potential for people to use our architecture to potentially run their own algorithms, right? There could be like marketplaces, obviously, that like where people are like building their own, right, and deploying it on our infrastructure and paying a fee. But yeah, I mean, really, our main, yeah, similar to like V3 Uniswap. But for now, like our main priority is using Avellaneda and trying to essentially kind of make it to where it's very easy for users to understand the risk return profile, because yeah, in market making can be like incredibly complex, and I think like what will achieve scale, and like people, even like a lot of meme coins are still launching on Uniswap V2 because they just don't understand V3, right? And like now V4 is coming out, and there's like hooks and there's all this stuff, right? Which I think will be awesome, and I think we'll definitely push this space forward. But I think, for us, we're following a very similar roadmap in that, we're launching with a very like, yeah, kind of that X times Y is equal to K curve equivalent for order books. Really getting people familiar and comfortable with that. And because I think that would like, when you look at the amount of volume that like Elixir, will hopefully be provisioning on Injective, right? Like the amount, like if you're trying to maximize that amount of TVL, right? Like having super complicated algorithms that people can choose between, it like, I think could only, like, we want it to be as easy as possible for end users to supply liquidity and earn a share of these rewards. So, but yeah, no, it's a great question. I think long term there's a bunch of opportunity though.
Awesome. I also noticed you mentioned like Elixir integrates with centralized exchanges as well. And I was wondering, maybe it's a feature plan. Like, have you guys thought about, let's say, like for even between other dexes, or even on Sexes as well, like doing things like cross exchange market making or hedging, by leveraging, well, I think it's more straightforward on other dexes, but like even on a Sex, because you mentioned Sexes as well.
Yeah. So, I mean, really long term, like this is something where we actually envision that like with these integrations, we'll be able to bring liquidity from other ecosystems like onto Injective, right? Like this is something where like say that we're integrated with Injective, right? And it's there because like people are building vaults right now on top of like Elixir that could potentially do exactly what you're saying, right? So for us, like the way that we're viewing like Elixir, it's very similar to Uniswap V2 in that like yeah, it's per pair like and a per exchange right now, and so and yeah, so we do in the future plan on having support for centralized exchange pairs. We have over 60 protocols that have committed to using Elixir for market making on centralized exchanges. So this includes guys like Avalanche, Ripple, like Lido for like the staked ETH token, right? So there are a lot of these different protocols that definitely like want to incentivize this provisioning on their centralized exchange pairs. But number one, they want to be able to like pay those out to their own communities, right? In the form of token rewards, right? They want to essentially boost the amount of transparency for market making. And then on top of all of that, right, like they want to get better capital efficiency for the rewards they're paying out, right? It's like much more aligned to pay out, some token rewards to your own community versus paying like a firm like an Alameda, right? Like, which is obviously not around anymore, but paying them like a $5 to $10 million, chunk worth of tokens, right? Which they have no incentive, to hold, or, there's like, and you also don't even know if you're getting the services that, they promised, right? Like there's very little transparency. And so, yeah, so I think long term, yeah, there is the opportunity for people to build kind of these vaults on top of Elixir. I think for us, we plan on keeping it per pair per exchange just for now, right? Just in like just kind of following that Uniswap V2 playbook. But yeah, long term, there's definitely like for example, if you like I'll give like one example. Like if for example on Uniswap you could supply USDC and USDT on Elixir for Injective, right, and earn X% APY, right, in incentives, right, or even if there's no incentives, right, like I mean you're still like all of the bids are below $1, like hard coded, and all of the asks are above $1. Any fill that you're getting, you're either buying USDC for 99 cents or whatever, or selling USDT at a $1.01, right? So you're only making that spread, right? So if people can see, okay, well, like we can essentially we have a stable, you're able to supply liquidity via Elixir, like just for their stables, and you can earn X% here, right? Or and it's higher in Injective, right, than on these other ecosystems, we envision that like there's these, like we could see a future where there's these aggregators, right, that actually will move the liquidity onto Injective, right, and bring kind of like liquidity across these ecosystems, into the Injective ecosystem. So that's something that, like, I mean, I think with the OLP program, I think we can see definitely being an Injective's like future, because you guys do have like your like a great like lucrative program that anyone could participate in. So we do envision that like long term there will be a lot of this kind of liquidity moving across these ecosystems. Yeah, but that's kind of how we're approaching it.
Great. Well, Eric, Albert, do you have any last questions for us before we open it up to a few from the community?
No, let's open it up.
Sweet. Yeah. So if anyone wants to ask anything, feel free just to put a request in. I see there's one from Dixon, so I'll bring you up right now. Looks like he oh, there he is. Hey, Dixon. Dixon, I don't think we can hear
Yeah,
you.
sorry, I'm here. Yeah, how are you guys? Thanks for giving me the chance to come up on stage. I just want to give a shout to the Injective team. I really like the space, even on Discord, on Telegram. This is a unique project, and it also proves that DEXs have a life going forward, since many of the sexes have been attacked by, let's say, the SEC or maybe other kinds of authorities in other jurisdictions. But I wanted, if maybe the panel or maybe guys in the audience, to highlight the power of DEXs going forward. Like, can we really give our liquidity, our trust to DEXs enough to shift away from? Just wanted to know if maybe the Injective team looks to give other incentives to maybe the African investor field. Thanks.
Yeah, I think the ambassador program is certainly one of the ways where any community across the world can participate in. And then on top of that, everything is permissionless, everything is global, and everything is open. So it doesn't matter where you're from or which region you're located. You can always participate. And currently, I think we have quite a few like ambassadors and like evangelists that are located in Africa, like Joshi, etc. That we're working very closely to have more efforts and events.
And the OLP is called the Open Liquidity Program for a reason. It's open, so you can also provide liquidity yourself, either by running like a trading strategy yourself, or through putting money in Elixir, which can market make then on your behalf. So yeah,
absolutely. If anyone else has any other questions, we'll give it a minute. Feel free just to request to speak, and I'll pull you up. I see Cooper spamming the emojis. Good to see you here, Cooper. Cool. We'll give it like 20 more seconds if anyone has anything to ask, and then we'll wrap up a little bit early. All right, cool. Well, it doesn't look like anyone has any pressing questions, but yeah, feel free to always like jump in either in the Injective Discord or our Discord, and shoot any questions off there, and we'd be happy to answer them. But yeah, we'll keep posting updates as we continue progressing this integration and the build out, which Philip described the timeline a little bit earlier. So yeah, we're ahead of schedule on it, which is exciting. And then yeah, last thing too, for anyone here who's going to be in Paris for ETHCC, we're going to be hosting an event there. Injective might as well. I'm not too sure, but yeah, hope to meet some of you out there. And yeah, thank you so much for the time, Albert and Eric. We're excited to get going with this and continue on with the partnership.
Yeah, one last thing for everyone too. So we're gonna be for people like in the Elixir community. Definitely, there's gonna be ways to participate as well. We're really close with the Injective team. We're gonna be doing some Galaxy campaigns. And so yeah, would definitely definitely feel free to check out the Injective Discord. And then vice versa. We're gonna have different ways to kind of stay engaged and earn like NFTs as well that might like open up different benefits, especially as you're able to supply liquidity via Elixir, right? Like there's going to be some perks that you can essentially access. So for people both in the Elixir and Injective communities, like feel free to join us on Discord. Check out the Injective Discord as well. Stay tuned because there's a lot of ways to kind of stay in the loop and as well as earn some perks as these vaults start going live. So anyways, guys, yeah, feel free to reach out if you have any questions. I appreciate the time today. And we'll wrap up.
Cheers, guys.
Thanks, guys.
All right. Perfect, guys. Appreciate it.
Awesome. Thank you, everyone.